Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2024, and we're diving into TPG's third quarter earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. TPG, a global alternative asset management firm, has just released its Q3 2024 earnings, and there's a lot to unpack.
Absolutely. TPG has been making waves with its strategic initiatives and financial performance. Let's get started. Revenue and profitability overview. Let's start with the top line. TPG reported total revenues of $855.4 million for Q3 2024. John, how does this compare to their previous performance?
TPG's revenue has seen a significant increase from $160.4 million in Q3 2023 to $855.4 million this quarter. This growth is largely driven by their capital allocation-based income, which turned positive this year. However, the net income attributable to TPG Inc. was $9 million, down from $15 million last year, resulting in an EPS of 4 cents.
And what about their profitability?
The operating profit margin improved to minus 2.5% from minus 59.1% last year, indicating better cost management despite the net income decline. This is a positive sign of operational efficiency.
Assets under management and strategic initiatives. TPG's assets under management have grown significantly. Can you tell us more about this, John?
Absolutely. TPG's AUM reached $239 billion, a 76% increase year over year. This growth is primarily due to the acquisition of Angelo Gordon, which has been a strategic move to enhance their capabilities across private equity, credit, and real estate.
How has this acquisition impacted their capital raising efforts?
They've raised $10.4 billion in capital this quarter alone, with significant contributions from their new platforms. This shows strong investor confidence in TPG's expanded offerings and strategic direction.
Fee-related earnings and dividend policy. John, let's talk about TPG's fee-related earnings and their dividend policy. What are the highlights?
TPG's fee-related earnings increased by 22% to $191 million, although the FRE margin decreased to 41% from 49% last year. This margin contraction is due to the integration of TPG AG and a decrease in catch-up management fees.
And what about their dividends?
They declared a dividend of $0.38 per share for Q3 2024, maintaining a strong payout policy. Their after-tax distributable earnings were $189 million, slightly down from $196 million last year, primarily due to higher interest expenses.
Investment performance and future outlook. Despite some challenges, TPG has a positive outlook. Can you elaborate on their investment performance and future plans?
Sure. TPG reported a net loss of $21 million, an improvement from a $95 million loss last year. Realized performance allocations were $32 million, driven by strong performances in their capital and growth platforms.
What are their future plans?
CEO John Winkelried highlighted their strong track record and the integrated business model. They have $58.4 billion available for future capital deployment, which positions them well for continued growth and value creation.
Key takeaways. In summary, TPG has shown robust growth in assets under management and continues to maintain a strong dividend policy. Despite some profitability challenges, their strategic initiatives and future capital deployment plans are promising.
Indeed, TPG's strategic acquisitions and capital raising efforts have set a solid foundation for future growth. Investors should keep an eye on their ability to leverage these assets effectively.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on TPG's performance in the comments below.